And for our first issue to open this week's Bizwatch, we read in the dailies that Meralco is again raising the power rates this month of April because of higher spot market prices. Consumers should again brace for another round of increase. Well, it can now be said that consumers can again look forward to even higher electricity rates when the second package of the tax reform for acceleration and inclusion, or TRAIN, comes into effect. Our business reporter Andre Ko has the story.
There are certain provisions in TRAIN that are anticipated to escalate electricity rates. One of these is the proposal to modify the franchise of the National Grid Corporation so that it will be levied with income tax. The proposed tariffs will affect the transmission wheeling charge and the ancillary services charge, which fundamentally are part of the pass-on rate.
Ancillary services refer to the power supply and services needed to support the transmission of electric power from NGCP's high voltage lines to its load customers. A big part of this is the mandated power reserve requirement to protect power grids from breakdown or sudden outages. The rest of the story with our business reporter.
Under the mandated ancillary services procurement plan, National Grid Corporation has to procure several reserves. These are reserves for contingency, reactive power support, black start service, and regulating and dispatchable reserves. If one has to properly maintain and operate a transmission system, there should be at least 26 to 30% reserve to serve consumers reliably. It must be said here that the ancillary services component of the National Grid charges more on a month basis in the electric bills. This also goes for the pass-through generation charge and power supply cost savings.
As this is developing, the transmission firm and other affected segments of the power industry are still studying the actual rate impact of this policy proposal.